In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a tearful Elon Musk tells the New York Times that nobody reviewed the infamous tweet, and he doesn't regret it. What else he spilled in a remarkably revealing interview. Plus, chip stocks on track for their longest losing streak in months. Is a semiconductor downturn a coming? And DoorDash raises $250 million more in its latest funding round, just a few months after that massive investment from SoftBank. What's next for the food delivery service as it takes on Uber Eats? But first, to our top story, Elon Musk says that no one saw or reviewed his controversial tweet about taking electric car maker Tesla private. Speaking to the New York Times, Musk said, quote, "I don't recall getting any communications from the board at all. I definitely didn't get calls from irate directors." Musk continued to tell the Times he wrote the tweet as he drove himself to the airport, which assured funding for a take-private plan had been secured. Tesla's board said it has not received a formal proposal. Joining us now to discuss, Joseph Spack, analyst at RBC Capital Markets, who currently has a sector perform rating on the company. Also with us, Bloomberg Businessweek's Max Chafkin, who covers all things Tesla. And of course, Max, the story also goes on to say that after that interview, through a spokesperson, Musk revealed that one of the directors did indeed call him about that tweet and asked him to not send any more tweets until they were reviewed. But talk to us a little bit about the emotion that he shared in this interview. He teared up at times. He talked about how hard it is, how much sleep he is not getting, and how, you know, from a personal pain standpoint, he feels like the worst is yet to come.
Yeah, I mean, it's a really, emotional and for me, just a stunning admission of basically all of the ways in which he has kind of misplayed this this go private situation. And it's sort of a situation where, you know, if you had fears about what had gone down as an investor or board member, oh, maybe he didn't really think too hard about this tweet. Maybe he wasn't, totally himself while he was thinking through this. They were all confirmed by this interview. And I think on one hand, you have to look at it as a good sign. I mean, I think there's something positive about trying to sort of come out and say, look, there are things I'm getting wrong. On the other hand, it does definitely confirm, sort of the worst suspicion, which is that there is no funding for this take private transaction, at least not yet.
And Joseph, if there is no funding for the take private plan, what does that imply? I mean, it seems like the SEC is moving fairly quickly in terms of having conversations with Tesla. They've issued that subpoena, and he could be in some really real legal trouble.
Yeah, Emily, first, thanks for having me. So, thinking about the stock and the funding secured commentary, look, there are a lot of deep-pocketed investors out there. In terms of having an edge of figuring out whether they are willing to invest with Elon and Tesla, it remains a little opaque, to be frank. But we always thought the timing of this was a little bit peculiar because Elon has clearly been obsessed with the short thesis, and to be frank, one of the best ways to crowd out the shorts is to put up profits, which is something that he promised is basically going to be sustainable from here on out. So I think if you are negative on the stock, it does embolden you a little bit to feel that there could be something a little bit misplaced operationally. And if, of course, this deal doesn't go through, and then you layer on some of the legal and investigation issues that you mentioned, you can see how sort of the negative thesis can begin to almost become more self-fulfilled.
He did talk extensively about the short sellers in the interview with the New York Times. He also said there were times when I didn't leave the factory for 3 or 4 days, days when I didn't go outside. This has really come at the expense of seeing my kids, seeing friends. I thought the worst of it was over. I thought it was from a Tesla operational standpoint, but from a personal pain standpoint, the worst is yet to come. Max, how much of this is Elon putting too much pressure on it himself? I mean, is it realistic? Could it be realistic for him to set less ambitious targets for production and reduce some of that pressure?
Well, I think clearly he put too much pressure on himself, and I think if you're the CEO, one of your jobs obviously is to make sure that the company's making enough cars, but it's also to make sure that you are using your time effectively. And I think clearly, there's a fine line with somebody like Elon Musk where he is very good at hands-on activity, but he definitely drew the line in the wrong place, and he's suffering for it, and Tesla's suffering for it. I mean, the whole point of this, the idea of taking Tesla private, if you take Musk at his word, was to sort of reduce distractions. And I think right now, this is what everyone's talking about. I can't even imagine what it's like if you're working for Tesla, if you're in the factory or in the headquarters right now and having to read this. I mean, it's just a tough situation that the company finds itself in now.
The article in the New York Times concludes with this quote from Musk: "If you have anyone who can do a better job, please let me know. They can have the job. Is there someone who can do the job better? They can have the reins right now." Joseph, is there someone else who could do this better than Elon Musk, or is he still the right person to be running this company?
Look, I think it's very important for Elon to be involved with the company. He's clearly the visionary. I think he has some grand ambitions, and I think he's the reason a lot of people have gone along for the Tesla investment ride. We've long said that Tesla is a company can use a little bit more operational focus. I kind of view the article and some of the comments as maybe even a little bit of an opening for someone to come involved and focus again more on the next phase of Tesla, which is really getting the operations right and becoming profitable. Does that person exist? I'm sure they're out there. To be frank, I don't know who it is offhand. And it is going to be a difficult job because on the one hand, you will be in the shadow of Elon. On the other hand, it needs to be someone that Elon trusts immensely to carry forward with his vision.
Well, and in the same breath, he says he has no plans to leave. And so, Max, I wonder how genuine is he actually being in saying he'd happily hand the reins over? I mean, he's got Gwen Shotwell, the COO of SpaceX, who, many have talked about how capable she is. He's still CEO there. He hasn't given that job up. Would he ever actually give up this job at Tesla? I mean, there's new reporting that he talked to Sheryl Sandberg about being a number 2 of sorts. That didn't happen, and that also he went through a number of potential COO candidates who, for whatever reason, didn't get the job or didn't take the job.
Yeah, I mean, the Gwen Shotwell model is the model I think you'd love to see at Tesla, just because he and Gwen Shotwell have just a lot of trust. They've worked together for a very long time. She's really good at sort of managing him and dealing with a person who's both hands-on, very opinionated. I think one challenge that he's going to have recruiting somebody like Sheryl Sandberg is, it's very hard to imagine a COO who's sort of on the rise in their career wanting to step into this, where you have somebody who's so strong-willed, who's doing things like, so erratically. I mean, it's just a situation where, like, why, in what world would Sheryl Sandberg say yes to running Tesla right now? It's very hard to see it. So maybe there's a way for somebody to come in from the outside. You could also imagine trying to bring somebody up, promoting J.B. Straubel, who's the head of technology, has worked with Elon for a very long time.
Joseph, the shares soared the day that he wrote that tweet. They've plummeted the day of this interview. The shorts might get their way as a result of all of this. Are you concerned about the actual operational future of Tesla and the company's ability to deliver? I mean, he's saying 6,000 cars a month this month. Is it possible?
We broadly are of the view that production and execution at Tesla will improve. I think, again, what this comes down to is where expectations were set originally and being able to meet some expectations that might have been a little bit ahead of schedule. And that's what's really driving the stock. And the other thing I'd say, related clearly to the execution, is to embark and deliver on the grand ambitions of Tesla, they will need capital. And part of that can be funded internally for sure if they get the operations off the ground. But having a stronger balance sheet to execute these plans, we think, is clearly important and will ultimately drive the stock.
I should clarify, he set himself a target of 6,000 cars a week.
Correct.
By the end of this month. Do you think he can do that?
Yeah, our latest indication is that production is improving a little bit from the 5,000 or so per week that they finished the quarter at.
Okay, Joseph Spack, RBC Capital, and our very own Max Chafkin. As always, thank you for weighing in. I'm sure there'll be another twist on Monday. Well, Elon Musk may not be the only tech CEO to be subpoenaed in recent days. The House Energy and Commerce Committee is considering issuing a subpoena to compel Twitter CEO Jack Dorsey to testify before the panel. This, according to a congressional aide familiar with the matter. The Senate Intelligence Committee plans to host senior executives from Twitter, Facebook, and Google for a September 5th hearing on foreign influence on their platforms. In a statement, Twitter said the company remains in discussions with the committee and no decisions have been made either way. Coming up, China is beating the U.S. on 5G. We'll discuss how it fits into the U.S.-China trade dispute. That's next. This is Bloomberg. A recent study from Deloitte shows the U.S. falling behind China when it comes to money spent on 5G technology. Not only is China spending billions more, but they are building more cell sites, hundreds of thousands more. Here's what a few telecom CEOs have said about the 5G rollout in the United States on Bloomberg over the last few months.
5G is an imperative. The nation's leadership in 5G is at stake. We've fallen behind to China, and T-Mobile and Sprint together is the only company that can change that.
We have driven the 5G ecosystem by pushing the industry to adopt the next generation several years ahead of original expectations. I believe the impact of 5G on consumers will be much bigger than any previous generation.
I think the 5G standard are starting to shape up. We will see that within the not too distant future. There is though a big demand from the customers and the operators to actually shorten the timeline until we have the standard clarified. We see a lot of interest from the industry in 5G.
5G is 100 times faster than current 4G or LTE, and with 5G we'll be able to really take data from car to car and car to infrastructure. So this will really help industry.
The amount of scale and throughput that you can have for content, services, commerce on 5G versus non-5G is a really big opportunity. You're essentially going to have a network out in the world, wireless network and fixed wireless, that will allow you to do services you've never seen before to consumers.
Here to discuss 5G developments and how it could be impacted by the trade standoff between the U.S. and China, we're joined by Jeff Shealy, CEO of Acoustis, a chip maker working to bring 5G to the masses. So, Jeff, first of all, you're very involved in, helping bring this technology to the fore. But how would you characterize how much farther ahead China is here compared to the United States?
Well, good afternoon, Emily. And first of all, I'd like to thank you for having me on your program. Acoustis Technologies is a high-tech silicon-based filter company. We allow smartphones to connect to the internet, and we're on the NASDAQ, traded under the symbol AKTS. Now, regarding 5G and how where the U.S. is positioned, we may be starting a little behind China, but if you look over the next 5 years, I believe what you'll see is about $275 billion spent on infrastructure investments in the U.S., equating to about 3 million jobs. And we think, in addition to that, it should come on strong with about $500 billion in contribution to the GDP in the U.S.
Is it a little bit behind or a lot behind? I mean, a report from Deloitte shows that China has deployed over 350,000 new cell sites, while the U.S. has built fewer than 30,000 since 2015, and that China has outspent the U.S. by $24 billion on 5G technology already. Couldn't that gap only widen?
It certainly could widen, but if you look at with our customer base, we're seeing activity, both Asian activity for development, but also activity that's going to be directly benefiting the U.S. So it certainly could widen, but I think you also have to remember Qualcomm is in the U.S. and they certainly were a leader in the 4G LTE, and we see them as certainly having a stronghold and a big contribution in the U.S. with their chipsets as well.
This administration is very concerned about China outpacing the U.S. in technology in particular. How does the trade dispute, do you think, how will that impact the U.S. versus China 5G race?
So if you look specifically for 5G in our business, which is, again, these high-performance filter chips that operate very high in the spectrum, there's only 2 competitors in the space, and those 2 competitors reside in the U.S. So whether it's trade tariffs, the world is going to acquire their filter technology from the U.S., and Akoustis Technologies was founded in the U.S., is manufacturing in upstate New York, and we think will be there's no other choice of where these filter chips are going to come from. So I think we're uniquely positioned in that regard to participate in this 5G market.
Now, we all understand how 5G will make our phones faster, but remind us why 5G is so important to the broader tech sector. I mean, the coming of 5G could be revolutionary for everything from self-driving car technology to augmented reality.
That is correct, and I think as your introduction noted, things like autonomous vehicles for artificial intelligence, there's high-definition streaming, there's low latency based gaming applications. Again, the latency problem in 4G LTE will be improved by roughly a factor of 30 times. Which really make these applications can become more real-time by removing such delays. So, and I don't even think that touches, we've been reading over the last few years about 50 billion connected devices on the network. And I think you got to have the capacity, and you need a high-speed network in order to make that a reality. So it's pronounced, and we see tremendous opportunity. A lot of additional bandwidth opening up, and that's capacity, and that also creates challenges in these filters, which we believe we're uniquely qualified to address, and highly focused on really that new spectrum that's opening up for 5G. We really see ourselves as becoming a dominant player in that 5G market.
All right, Jeff Shealy, CEO of Akoustis, thanks so much for stopping by. Coming up, semiconductors stumble. Is the crypto gold rush over for the chip makers? And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Are cracks starting to appear in some of the U.S.'s biggest chip makers? The industry has always been known for its boom and bust cycle, but that is a reputation the biggest names have been trying to lose. Semiconductor stocks are on track for their longest losing streak since April after disappointing results from NVIDIA and Applied Materials this week. Analysts start sticking by NVIDIA, though, pinning hopes on new high-end chips scheduled to hit the market next week. But investors are wondering if we're on the verge of a new downturn for chip makers as the gold rush spurred by sales to crypto miners ends. Joining me here in San Francisco, we've got our semiconductor reporter, who else but Ian King, and in New York, our Bloomberg Markets Live Blog senior editor, Mike Regan. So, Ian, how much was this crypto craze fueling the rise in NVIDIA?
Well, I mean, on the one hand, it looks really bad. You had something which was a $280 billion a quarter market in the first quarter. Now it's nothing. Annualize that, that was $1 billion market that's gone away in the space of 3 quarters. Looks terrible, but that is kind of taking attention away from their other businesses, which are growing like the weeds still. Is
there still potential for NVIDIA and other chip makers in cryptocurrency, or is that a dying breed?
We saw Bitcoin come and go. We've seen Ethereum come and go. It's a technology story for these guys, right? You can mine these things, becomes good enough so that it's worth investing money in to make custom chips that will do the same job. Therefore, your standard chips like GPUs become less efficient, so the sales go away. So for them, it's a technology cycle. We see a new currency come in. Maybe it'll be another boom for them.
Mike, I have a chart here in my GTV library showing the comparison of the chip sector to the broader tech sector, and you're seeing quite a big divergence there. You know, what's really been fueling this?
Well, as you said, I mean, chip stocks are prone to sort of this boom and bust cycle. If you look at the Philadelphia Semiconductor Index, I mean, it was up more than 35% over each year in the past 2 years. So I think obviously this crypto revenue was sort of this bonus surprise revenue that companies like NVIDIA and some others were enjoying somewhat out of the blue out of the last year. It's safe to say that exuberance in the crypto market of last year definitely seeped into these stocks. But there is a few other things going on that I would point out. The big story this week, obviously, was that China was suspending the approval of some video games, which leads many to believe, well, gamers will have less incentive to update their hardware. And I think while that's not necessarily part and parcel of the trade war, it does make you wonder about chip stocks and their exposure to trade tensions. I think much of tech is immune to it, but chip stocks obviously have a lot of exposure to trade tensions.
So, Ian, there's also been a lot of failed mergers. Do you think we're on the verge of a chip downturn? Is your job about to get a lot?
We'll see about that. I mean, one of the companies that reported yesterday was Applied Materials. They make the equipment that companies like Intel, Samsung use to make chips. Because of the lead time, because of how long it takes to build and set up a factory, they're usually a very sort of canary in the coal mine type stock type company. What they said was, we're not going to grow basically for the first time in 10 quarters. That caused a lot of people a lot of concern. At the same time, they came back shouting, no, AI, all of these new technologies, self-driving cars, they're going to continue this boom that we've seen in demand. Don't worry about it.
Quickly, Mike, any rethinking coming in terms of earnings expectations for the rest of the year?
Well, for the full year, I mean, semiconductor stocks are looking great. Obviously, a lot of that's probably priced in. They're looking at estimates for about 52% earnings growth this year. But it kind of goes to that as good as it gets notion, because the forecast for next year, 2019, are only about 11%. And then for 2020, only about 5.2%. So it's definitely, sort of peak growth for this year for now, it looks like.
All right, Mike Regan for us in New York, and King here in San Francisco. Ian, I know you'll keep us apprised. Coming up, thieves stole millions from an Indian bank, but it wasn't an old school stick 'em up heist. How ATMs were their way in. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Last week, the FBI warned banks that their systems were possible targets of a wave of attacks from cyber criminals. Well, that warning may have come to pass, as India's Cosmos Cooperative Bank saw $13.5 million looted from its ATMs in simultaneous withdrawals across 28 countries. So, just how did the criminals do it, and is there still more to come? To answer that, I want to bring in Senior Vice President of Cybersecurity Strategy for Proofpoint, Ryan Kalember. And in New York, we have Bloomberg's Hannah Levitt, who covers the banking sector and wrote a piece on this particular situation. Hannah, it sounds like there was a lot of coordination here. What can you tell us about the techniques used?
Yeah, so the FBI warned banks last week of kind of an imminent cyber threat against banks. So what happens is that these criminals breach the bank systems as to take the limit off from the debit removal, and then they just remove unlimited amounts from the ATMs using fake debit cards.
Ryan, there are techniques called jackpotting, techniques called cashing out. What does it appear were the techniques used here?
What's most common in a scenario like this is that it'll start with simple phishing email. Right? What they're really looking to do is get the same sort of access that a certain bank employee has to remove the limits and then actually enable themselves to set up a interconnected gang of people around the world to actually go physically to ATMs and withdraw as much as they can before they actually physically run out of cash.
So they actually have a web of people in 28 countries doing this simultaneously.
Well, you'd have to in order to collect the funds. They actually also used the SWIFT systems to do another transfer, which didn't actually require physical presence at the ATMs, but that just shows the sophistication of this particular actor.
Now, Hannah, tell us about what the FBI's warning to banks in particular was.
So the FBI just told banks to be on alert for this kind of attack where the cyber criminals were going to be breaching their systems. And for banks, you know, this is always a concern. Bank executives have said that cybersecurity keeps them up at night. So beefing up their security systems really is an important thing for them to do on their day-to-day. But, you know, further than that, the FBI's warning just prepared them even further for any kind of imminent attack that they were fending off.
Ryan, what else about this attack in particular strikes you? I know in the break you mentioned that it's a relatively new kind of attack and different from where we've seen hackers targeting more recently.
Well, I think it goes to show they had a spectacular level of access to the bank systems as well as a really good understanding of processes. They were able to not only remove the limits on the debit cards, but then pivot over to the SWIFT, the interbank transfer system, and use that to steal still more money. That's the sort of technique that we've only seen for a very narrow set of sophisticated actors, some of which...
Who have been doing what in the past?
Obviously, you have the SWIFT attacks from the last couple of years that have been attributed to what we call the Lazarus Group, which is presumably state-sponsored from North Korea. There are private groups. One particularly famous one is known as either FinCEN or Carbonac, depending on your naming convention. Cybersecurity has lots of those. They've been doing this for years and years and are reputed to have stolen over $1 billion.
Do you think that the people behind this could also have been behind some of the crypto hacks that we've seen over the last several years?
Well, certainly that Lazarus Group, the one that's distributed to North Korea, they've been extremely interested in stealing crypto, both from individuals as well as from exchanges. They've compromised many of those. But it really just goes to show there's a tremendous amount of innovation happening on the cybercrime side, but it really does go back to how do I get the most money in the shortest period of time.
Hannah, what's the real impact on consumers here?
That's a great question. So actually consumers, at least in the United States, consumers, there's no impact. There's zero liability for consumers on this kind of hack. And then so they get their money back in their accounts if it's taken. And then on the bank side, they have insurance policies against cyber attacks. And then also they, in their reserves, they have some money to account for loss from fraud.
Ryan, how does the coming ubiquity of chip cards change the game? I mean, chip cards have been ubiquitous elsewhere for a long time, but here in the United States, it's only just becoming a reality.
It really does change what the cyber criminals are going to target. Before, you had these very large databases of credit card information, and so you'd see the sort of mega breaches that happened at Target most famously and quite a few other retailers. What happened after that, though, is the chips made it quite difficult to compromise people in that sort of way. So they pivoted over to basically having access to other types of systems that would allow them to then take money physically out of ATMs. Obviously, cryptocurrency theft and the related wave of ransomware was, I think, inextricably linked up with this, and it just really pivoted the targets for the same set of cyber criminals who actually, you can use the same set of techniques for all three of those types of attacks.
What are the legal ramifications here? I understand the Trump administration has made it now a lot easier for the United States to launch cyber attacks on enemies, be they in North Korea or elsewhere.
Well, there's been quite a lot of debate recently around this notion of hacking back, right? If you identify an attacker against you, why can't you go out and disrupt their operations? That sounds good in theory, but it turns out to be extremely tricky in practice. Now, what the administration did in revising the Obama-era rules was mainly about, I think, taking a little bit of the lawyerly controls that we had introduced, particularly after the Snowden revelations, to organizations like the NSA, which have both the capabilities and the controls to execute hacking back. There are particular bills in Georgia and a couple other places where we've talked about doing that in the private sector, and I think so far cooler heads have prevailed. These sorts of attacks that are financially motivated, you don't really achieve a lot when you hack back, because the attacks themselves are not even launched by things that the attackers own. There are other things that the attackers have hacked that then they use to stage the attacks against the real target.
So do you imagine hacking back is happening right now, or?
It depends how you define it. I think there are people who definitely try and go to the dark web, see that their credentials are for sale, and try and disrupt those operations. Right? You're selling my customers' data. You're maybe selling my internal employees' data. I want to mess with you. That is a little bit on the offensive end of the spectrum. What we're not seeing is somebody launching a denial of service attack against a hacker's infrastructure or something along those lines. There's way too much potential for collateral damage and liability and all these other issues we haven't even begun to explore.
How easy is it to actually track these folks down and bring them to justice? Isn't it pretty impossible?
Well, when it comes to the particular type of attack we've seen lately, there is that one criminal organization, Fin7 or Carbonac, and the FBI and Interpol have arrested at least 3 of the members of that gang over the last couple of months. They make other types of mistakes, though. In this case, the Spanish authorities were led to the leader of that gang because he bought a luxury car and forgot to pay for it. And of course, he was living in Spain, which is a more accessible place than, say, Russia or China or even Nigeria, where we see a lot of these cyber criminals operate from.
Hannah, what are banks doing right now to up their own security and try to prevent more of this from happening?
Yeah, so banks are pretty tight-lipped about what exactly they do to beef up their own security, but they are, taking action. They're monitoring for these types of things, and yeah, they've said they're aware of the threat and they're working with authorities to deal with it.
Will we see more of this, Ryan?
We absolutely will, but I think we'll actually see it in smaller banks. One of the things that I think Hannah mentioned correctly was that banks are insured against these sorts of losses. There's actually a bank in the southeastern United States that's fighting a case against its insurer right now because they got hacked in a fairly simple way, just email phishing. Twice in a row, lost a lot of money, filed a claim, and have not yet been paid out. So as long as the cyber criminals are able to execute attacks like that, particularly against the smaller banks that don't have the budgets that the big banks have to spend on cybersecurity, and more critically, don't have the teams of skilled professionals to defend those networks and systems, we're going to see more of that.
All right. Ryan Columber, Proofpoint, and Bloomberg's Hannah Levitt. Thank you both. We'll continue to track. Well, the Washington Post has settled disputes with its own newsroom over its social media policies. The paper also came to a resolution over the disciplining of a reporter who criticized owner Jeff Bezos. This according to sources familiar with the situation. Reporters may now face discipline for social media posts that are judged as false or defamatory towards the paper, its customers, and advertisers. The settlement also resolves a dispute over an op-ed an employee wrote for the Huffington Post criticizing Bezos for having taken a, quote, laissez-faire attitude to the financial well-being of his employees, and that income inequality is someone else's problem. Coming up, food delivery service DoorDash is now worth $4 billion thanks to its latest funding round. But is it enough to fight off competition from Uber, Instacart, and Amazon? We'll discuss with CEO Tony Hsieh. And Google is in damage control mode. How CEO Sundar Pichai and founder Sergey Brin are trying to smooth things over with employees after the company's plans to get back in to China. This is Bloomberg. Food delivery company DoorDash announced it's just raised $250 million with heavy hitters like Cotu and DST Global investing. This on the heels of a huge financing round back in March led by SoftBank. So, flush with capital, can DoorDash keep up and grow its user base in what's becoming a very competitive industry? For more, we're joined by DoorDash CEO Tony Hsieh. And I feel like you were just here talking about the huge round from SoftBank. You've got now hundreds of millions more dollars to go at the competition. What does this kind of capital enable you to do?
Well, it's great to be back. The capital really was an opportunistic financing for us. We were not out on the fundraising trail. We received multiple inbounds, and we're excited to partner with Cotu and DST. The fundraising really allows us to accelerate our growth. DoorDash is now the fastest growing last mile logistics player in the US. We're the largest player west of the Mississippi, and we really want to keep capitalizing on that. So we're investing in new products. Last week we just announced DashPass, the launch of our subscription program, as well as pickup. We are extending our DoorDash Drive platform as well. We announced a partnership, actually, with you about Walmart, in which we launched a pilot in 1 state and 10 stores delivering groceries for them. That pilot has now scaled to 300 stores in over 20 states.
So if you don't need the money, why take it? Because now you have a $4 billion valuation to live up to. That's a lot of responsibility.
Well, a lot of activity has been achieved even since the Series D, which we announced in March. We're ahead of all of the goals that we outlined, during that release. First, we're ahead on geographies. We mentioned that we would be ending the year in 1,600 cities. We're actually going to end the year closer to 2,000 cities, so 400 ahead of our target. We are adding more restaurants than ever before, adding to our selection advantage. We already partner with more of the top 100 restaurants than anyone else and all of our peers combined. Since the Series D, we've announced partnerships with Chipotle, as well as an exclusive partnership with the Cheesecake Factory.
Uber just gave us a look at their financials, and they are continuing to burn through cash, and a lot of that money is going into Uber Eats. How well equipped do you think you are to take on the competition, whether it's Uber or Amazon or Instacart?
Well, DoorDash has always been focused first and foremost on its customers, merchants, and dashers. It's what has allowed us to become the fastest growing service in the US. And for us, there's a lot of work left to do. We want to add more ways in which merchants can connect to the consumers inside their cities. We want to offer more services so that merchants can grow beyond their four walls. It's a very, very early days still in the industry. I know today we kind of take for granted that there are all these delivery companies. Today, something like pizza, half of its sales are delivered, but 40 years ago, only 4% of pizza sales were delivered. Today, outside of pizza, only 6% of non-pizza sales in the US are delivered. So there's a long runway ahead for the industry.
So what do you think you have on Uber?
Well, I think it's first and foremost our merchant-first approach that separates us from all of our peers.
Rather than Uber first.
It's our approach on making sure that the operations are perfect so that customers get the highest quality experience, the lowest delivery costs, and the fastest speed.
So do you think there's going to be consolidation in this industry, or will some of these smaller players, whether it's Postmates or Caviar, will they disappear? Because it's a really difficult business, logistically and financially, to justify.
It is a difficult business. It is also a massive opportunity, and I think that's why you see a lot of the players. But I think at the same time, what you're seeing is that capital, as well as talent, as well as a lot of the initiatives, are accruing to the winners in the space, and that follows much of the trajectory in many other industries.
Does Amazon's increasing interest here, obviously another company with unbounded ambitions, does that concern you?
We invite anyone who wants to come into the space. I think that this industry has never been called delivery, and the offline world largely has been a world that's been ignored by the tech industry. If you think about the biggest companies built in the last 2 decades serving consumers, they're largely in the online world, even though the offline world is 10 times bigger. So it's not surprising to me to see so many different entrants now come in. And I think, for DoorDash, being someone who first and foremost started by serving the local businesses on the streets, that's been our mission from day one, and we're very, very excited to keep doing that.
So given that it is a cutthroat business where there is a lot of competition, what keeps you up at night?
The first thing almost always is the people, and whether or not we're providing the right opportunities for the people at DoorDash to do their best work. If we have the right people in the right positions, we are going to be just fine. There's so many opportunities that we want to build on in order to accelerate the transformation of every business in America, and really make sure that the 60% of jobs that these businesses on the streets produce every year stay in America.
You've got the backing of SoftBank and Masayoshi Son. Do you have plans to go global? DST Global now?
We are always looking at the broader market. Right now, the focus is on the US and Canada.
Okay. Tony Xu, CEO of DoorDash, thank you so much.
Thanks, Emily.
Bye. Coming up, Google wants back into China, but does that include censoring speech? Its employees say not so fast to the search engine's Project Dragonfly. That is next. This is Bloomberg. A little over 2 weeks ago, news broke that Google was working with the Chinese government on a censored version of its search engine. Now it appears that Google CEO Sundar Pichai is in damage control mode inside the company, as well as co-founder Sergey Brin. Bloomberg has learned that Pichai told employees that the plans are exploratory and in the early stages. This according to two people familiar with the meeting, and according to a transcript of the meeting obtained by Bloomberg. Pichai said, "Our stated mission is to organize the world's information. China is 1/5 of the world's population. I think if we were to do our mission well, we have to seriously think about how we do more in China." Here to tell us more, our Bloomberg tech editor, Alistair Barr, and co-founder Sergey Brin was also at this meeting, backing all of this up. And Sergey was one of the two people who really made the decision in 2010 to pull out of China. They're not backing down, and they're saying that these exploratory explorations will continue.
I thought it was really telling that Sergey was there. If he hadn't been there, I think there would have been, more backlash from, or there would have been more backlash today from employees. He was the one originally who led it on complaints about censorship. He even compared China to the totalitarian regime in Russia, where his parents were from. And so the fact that he's now standing up and supporting this move is a really, really big change.
But why the about face? I mean, China is just as big as it was in 2010.
It's a lot bigger, and now it's the biggest internet market in the world.
But it was always going to be big.
Yeah. I think a lot of people, with hindsight, at Google and former Googlers, would say that it was a pretty major strategic mistake to leave. China would have gone on probably doing what it wanted to do anyway, if you know, and it has done that. And maybe it would have been better to stay in the country and try and influence things from inside. And certainly from a financial perspective, Sundar Pichai is a much more pragmatic leader than the leaders before. From a financial perspective, it's been terrible for Google.
Obviously. This letter obtained by the New York Times that was signed by many, many, many employees. "We urgently need more transparency, a seat at the table, a commitment to clear and open processes. Google employees need to know what we're building." Talk to us a little bit about the reaction to this meeting so far. I know that the comments started leaking out almost immediately, and that someone at the meeting actually said we need to change the topic because journalists are already getting a hold of what we're talking about here. But that's no surprise.
I mean, it's certainly unusual that an internal meeting at Google was publicized so quickly. Google's very open, and Google's relationship with its employees is special and different from most companies. That they basically spend a lot of time trying to recruit the best people and treat them amazingly well, and they give them a lot of power. And that's basically made Google what it is. Now it's in a situation where employees want more of a say. And in an American corporation, generally employees don't have a say in what management wants to do, and it gets very, very complicated in a company with 85,000 people if you know 1,400 people get to say what the company wants to do. So it's a really difficult balancing act for Google, but I think to me it's another example of Sundar Pichai's Google versus Larry and Sergey's Google. Sundar is mostly all about business, and he's pretty pragmatic, and I think he's probably just going to push ahead and hopefully try and do this.
Certainly does seem like Sundar is in charge. Alistair Barr, our Bloomberg tech editor, thank you so much. And finally, Amazon is developing a new device that records live TV, working around cable providers and encroaching on TiVo's market. The device would include physical storage and connect to Amazon's existing Fire TV boxes, the living room hub for the company's online video efforts. Bloomberg is reporting Amazon hasn't made a final decision on rolling out the streaming feature, noting that the plans could either be canceled or delayed. For more, I want to bring in Bloomberg Tech's Mark Gurman, who helped break this story. So, Mark, what can you tell us?
Can tell you that TiVo stock is down in reaction to this. This is a digital video recording device, a DVR, pretty old school technology, but Amazon is hoping to liven it up a bit as part of their living room push with the Fire TV devices. This will join a growing ecosystem of living room devices that they've been rolling out over the past few years or so.
So, how does this broaden out Amazon's, larger strategy and fit into the bigger end game?
Right, Amazon is looking for every way forward to taking over the cable companies, taking over competitors in the technology space that focus on TVs, Roku, TiVo, et cetera, Dish Network, Slingbox. And this is just another part of it. This is a step towards doing more of what the cable companies do. You sign up for Comcast, you sign up for Xfinity, you sign up for whomever, they're going to give you a DVR. Now what they're trying to do is they're trying to push Fire TVs instead. And now for people who want to be able to record live TV streamed to your Fire TV box, maybe through Amazon channels or other apps like ESPN that you have on the box, this will be the way to do it.
How does Fire TV so far, how has it added to the bottom line?
You know, that's a good question. They don't really discuss how many units they sell of particular devices. They do say, however, that the Fire TV is their most popular device that they sell, so do with that what you will, because they don't really give much context or many numbers there. But what I can tell you is that obviously they're selling so many Prime subscriptions, and Prime subscriptions are core to the content that you're able to stream on the Fire TV box. So from that perspective, it's very essential to the company.
All right, Bloomberg Tech's Mark Gurman leaving us with that Friday story. Thank you so much, Mark.
Thank you.
That does it for this edition of Bloomberg Technology from San Francisco. I'm Emily Chang. This is Bloomberg. Thank God it's Friday.